behalf of Biz Talk Today TV and Crosscheck Media, welcome everyone to Buy, Hold, Sell. I am your trader, Todd Schoenberger, and I'm joined by my friend and co-host, Tobin Smith, and in sunny and spectacular Scottsdale, Arizona.
I get always worried when you say something nice about this area, okay? Just go back with the insults.
Well, I got to tell you, Toby, I know it's hot out there, and it's just as hot as the LA Dodgers right now. We'll get into that later on. But with us today is the editor-in-chief of the Stock Traders Almanac, Jeffrey Hirsch, who is coming back to Buy, Hold, Sell. Jeff, welcome back to the show.
What's up, fellas?
Well, I got to tell you,
Jeff, I got to tell you, I'm trying to have some empathy for you. You know, the Dodgers payroll is only like $200 million more than the Yankee payroll annually. So
it's brutal. It's brutal in the Bronx right now. I mean, I used to go. I was there when Boone went boom in 2003. Yeah. It's rough. They look flat. The Bombers are bombing.
The Bombers are bombing.
They are bombing. That is for
it's
sure.
horrible.
But what is not bombing, though, is the stock market, including the Stock Traders Almanac, which has been on fire for the past few years.
Who wrote that? Who wrote that, Todd?
Well, I got to tell you, the editor-in-chief, our featured guest today. But I got to ask you, though, one of the things that you bring up in the Almanac is about weakness, seasonality weakness. Yeah. We didn't really see it this year. What's that all about, Jeff?
Well, there's an old saying about, when the market doesn't rally during a bullish season, there's other forces at play, and, those forces will have to say when it's over. I think the inverse is
Sounds
true
like
here.
An excuse, Todd. I'm just saying.
No, not at all, man. I mean, we did get a little bit of volatility. We did get the sell-off after July that we were talking about, but not as much. And what that means is that the bullish forces underlying the market are much stronger than seasonality right now. And what I suspect will happen is, combined with the year-end seasonality, everyone's going to be piling in and trying to, ride the momentum. We're going to see perhaps an even stronger best seasonal period, best 6 months period. Bitcoin's taken off today. We had a little bit of selling here. I mean, right around this period, end of October, beginning of November, is one of the great turn of the month trades. I went long last Friday ahead of this end of the month, beginning of the month, turn of the month trade for October, November. So to me, the fact that we weren't negative seasonally, okay, sorry, seasonality doesn't work every single time. It's not 100% perfect. We've had this discussion before. It just underscores the strength with the economy, how people really don't give much of a hoot about who wins the election, just the fact that we want to get through it. We know that the market and the economy and the business corporate community is stronger than Washington, and the tech boom is for real. And
well, let me bail out Jeff. Let me bail out Jeff a little bit here. One of the things about going back historically is the composition of the market and the composition of the investors in the market. Clearly, when we changed from an actively managed mutual fund world to an index funded world, you don't have the October selling. At least when I ran mutual fund, you had to have your sales in by the end of October. That
31st, that's the big
fiscal
deadline.
Year. So to me, a lot of the seasonality was a function of the mutual fund, active mutual fund manager who had to sell stuff and take losses. We don't have that. We got 2 points.
We had it last year. We had it in 22.
I understand it, but also there wasn't as much profit to be taken. We've had almost 24 months, right, of this up. So it makes sense, Jeff. I'm trying to give you an out, but if you want to be a schmuck, I'll.
Well, on the seasonality,
we love seasonality skeptics. That's what keeps.
Yeah, I know. I was going to say, right.
What your weakness call though was actually our friend Sam Stovall said the same thing. He actually was in. Everybody profiled him because he came out and said the markets should see a 5% drop. Which, he even said it's really not going to move the needle anyway, because still at year end, we're expecting higher highs. But the Almanac has been spot on. And
super bullish all year.
Yeah.
And from our bottom call in 22, which we were all there for together.
Todd, this is the last time Hirsch gets to talk about his bottom. Okay. I mean, for crying out loud. You got a nice ass, Jeff. You have a nice ass, okay?
He has a nice ass. Before we even
You know what?
started
You
the show,
might
he
be
was
able to
telling
see
us
it
he
in
was showing us
person.
his muscles.
I'm going to be out in Scottsdale in a
Beautiful.
couple of weeks.
Well, you're
For a
guest
little,
at my house.
conference. Yeah, we might stop. Maybe I'll swing by.
There
Please
you
do.
go. And that's always
We're going to be out at the
definitely
Four
party
Seasons.
house.
Yeah,
Absolutely.
you're very close to where I live.
I'm going to play Troon on Saturday, I think. Troon
Well,
North.
if you're psychotic on the golf course, let me out there with you.
Psychotic?
You
I'm
said
gonna
your
be
brain.
serious.
You said your brain goes crazy on the golf.
No, I'm going to try to be focused. I'm going to try to score. Put up a number.
Well, if our audience is still with us after all that, we got to ask Jeff, what does the 2024, we'll get into the 25 Almanac later on after the break, but in the 24 Almanac, what can the audience expect for the remainder of the year?
It's bullish. I mean, we've got two sort of almost sitting presidents running. We have Trump, who was there before. We got Kamala, who was, basically the same thing as Biden. And I think that's what the market's reflecting. There's a lot of speculation right now with some of these, predicted sites and all those things talking about Trump winning. Anyone who's really, aware of what's going on there, it's pretty much 50-50 right now. And the market's telling us that no matter what happens, I mean, the Almanac's telling us no matter what happens, the market goes up after the election. And usually coming in, I mean, Stovall's got an indicator about August to October showing the incumbent winning. I'm not taking any bets on that. I had a bet on whether Biden would drop out or not, or be there. I lost those. I said he was going to stick it out. I'm okay giving people some, taking them out for a round of golf for $100 here or there. But,
Well, golf is not $100 at Troon, okay? Just like
no, I'm saying one was a $100 bet, a gentleman's bet, and one was a round of golf up by us. But whatever. And I'm happy that I lost that because he needed to go. But the Almanac is telling us that the market's going to keep going up because we're going to get through this event.
All right, so Jeff, I know you don't do bonds necessarily, but it's been intriguing that the playbook that says, well, if interest rates go up, then, for instance, gold goes down or the dollar goes down. But now we had, it became risk off. But now we're getting gold. I think we've been long gold, I don't know how long, since June or so. And we use this thing called the GDXU, which owns.
We're in the GDX too. Just the regular GDX.
Yeah, it owns the miners. My God, that thing is up like 75% in the last 3 months.
So I want to ask you about the bonds.
Sure.
And then when I'm glad you brought it up because, long-term bonds are higher. There's that 4.3 level on the 10 that we were talking about all year. But the curve seems to be steepening.
Yeah.
Which last I checked, that's positive for the market, right? And that's bullish. So, okay, maybe the Fed overshot a little bit with their 50 points. I thought it was a bit much, but maybe they're just trying to do a shot across the bow and look at some data. But it seems like was dollar stronger, right? So we're seeing economic strength. And the bonds, the longer bonds are up, so that's good for the banks and financials. And then to gold, I've been thinking that some of this gold, bullishness may be a little bit based on geopolitical uncertainty.
Oh, absolutely.
Absolutely.
In addition to. Because the inflation
right.
So I think people are worried about what's going on in the world.
And our own domestic politics here.
Right. So let's go back to your question about, the politics side of it. Both sides, one's going to spend 2.3 trillion in deficit spending. The other one's going to do 2.8 trillion. And that's just, a number they pulled out of their arse.
And they're not going to get all the shit through that they want to get through.
Oh, yeah, we'll hope. I mean, we always hope for a divided Congress. But if I'm a longer term investor, and particularly if I'm foreign, because I would see the dollar get depreciated if we go to that. What's the number? We spent more in this fiscal quarter on interest on the debt than we did on defense. And that to me, if I'm a person outside the United States who runs big money, then everything since World War II has been that the United States defends the world. It defends the Suez Canal. It defends the Panama Canal. It defends. We're not really defending Ukraine. We're sending a hell of a lot of missiles, but we're not doing the way we used to do it. Right. And now we're spending more on interest. And if either side wins and gets a House and a Congress, we would be spending more than our military budget and 1/4 of our Medicare budget on interest payments. So yeah, it makes sense to me why gold is long. I'm long gold because
it makes sense why they'd cut short-term rates too.
Yeah.
Right.
I mean, it's a defense against idiotic, Congress and our federal government.
Let's hope we have one party in the Congress and one party in the White House, because that way we can get something compromised and properly done.
Well, it's funny you say that, because Jay Hatfield sent Toby and I a note yesterday, and he did say he is very bullish on the markets. He actually is looking at a 6,600 mark for the S&P 500 by year end, which will be 14% above our current levels. But he did say that if there is a Democratic sweep, he's only looking at 6,000 on the S&P 500. So Toby is right. So are you, Jeff. When you look at that mixed bag, you definitely want different parties on each chamber.
Turn to page 80 of the book I just sent you.
Okay, you got it.
I'm
Definitely
serious.
will. Well, we're going to talk. Go ahead, Jeff.
No, there's a bar chart on there. We'll look at that in a minute. Yeah, go ahead.
We will. We will look at that, because what we're going to talk about coming up after the break is about the Stock Traders Almanac for 2025. This is hot off the presses. I mean, hot. Toby's is actually probably in his mailbox right now. It's boiling up because everybody wants to know, what is the STA going to tell investors to do for next year?
Oh, now it's the STA? We can't say Stock Traders Almanac?
Stock Traders Almanac. And we have the guy who's going to tell everybody what they should expect. So please stay with us. We'll be right back after the break.
You make me sparkle, you make me tingle, even the stars are brighter when I'm with you. And when I surrender to a tasty kiss or two,
Martini and Rossi Asti.
You make me sparkle, yes,
Make the moment sparkle.
Welcome back to Buy, Hold, Sell. Well, with us today is Jeffrey Hirsch. He is the editor of the Stock Traders Almanac. He's also a BTT contributor. We love having him on the show, and why not? Because the Stock Traders Almanac has been spot on since the 2.5 years we started this show.
On? That sounds like you're from the Bronx.
The guy's on fire. And I have right here in my hands the 2025 Stock Traders Almanac. So, Jeff, got to ask you, what is the new edition telling the audience about the stock market for next year?
Well, it's a little more bullish than people might expect. The history of the post-election year, going way back to like Andrew Jackson's time, is bearish. The first 2 years of the 4-year cycle are negative, but post-election years have improved quite a bit since World War II and dramatically since 85. It's the best year of a 4-year cycle since 85. 17.2% versus 15.2 or 3 or 4 for the pre-election year. Pre-election year's got one more year of gains, a plurality of gains, but the average is much more solid. We still see that midterm low, midterm year like we had in 22. That seems to be that weak area of the 4-year cycle, but the post-election year is stronger. I'm already looking for 8 to 12%, year over year, for 2025. Probably a little weakness in end of the first quarter and then in Q3 there. Some of the seasonal weakness that, we tend to see, but there's nothing really scaring me about next year, as long as we get through this election and we actually get somebody decided without a whole lot of craziness between the election night and the next day, hopefully.
Yeah. Good. Well, I mean, Todd, there's also structural fundamental issues behind seasonality. We talked about a little bit in October, but when people get to tax time, for those of us who pay taxes, there's usually a holy smokes, I owe this freaking much, and then you sell stocks, to get to pay them. So that's typically why we see, particularly in the most heavily appreciated stocks, shockingly, that's where people take the profits. They don't sell their losers; they typically sell the leaders, and that's just common sense. But it's still the economy stupid right now.
Yep.
And it's been proven historically. I just like to get into his turf a little bit. That if you have full employment, it's technically impossible to have a recession unless you had a financial crisis or some other or pandemic. So we not only have full employment. If you saw the numbers yesterday and today, we have 2.5 million more jobs than we have people employable. Until
they adjusted some of the stuff from earlier in the year that the Fed was all freaked out about, right?
Yeah, exactly. So
can you tell me then, if I can just jump in for a sec? There was this whole LEI, indicator stuff and all this recession forecasting with the inversion, which I never subscribed to or bought onto. What are we going to do about that? I mean, how people are still thinking that that's the case. I mean, you just said there's no recession going to happen. The economy's strong. Maybe we had one in Q1, Q2 of 22 with the a couple of negative GDPs. But what is with these indicators? When are people going to realize that they don't work?
Yeah, but the number one thing is anytime you do statistical analysis, I almost got a B in this in college, that you have to throw out the outliers. So yes, we had an inverted yield curve, meaning that the short end, the short-term stuff was higher than the long-term stuff, okay? But that's because we had a pandemic, we had the Fed making money. And let's not forget that ever since the freaking, cataclysmic great financial crisis, actual real rates after inflation have been zero for 12 years, 14 years. You could make the case that that's why the market has been so strong. Because there was no alternative, right? It was don't fight the Fed. There was no Tina. There is no alternative.
And then there was that spending we touched on previously.
And then right, and then exactly. So we pumped $3.5 trillion into an economy that was already stretched. And then obviously we had the supply chain issues, et cetera, et cetera. It always, just as a side note, just ticks me off when someone complains. He says, "I'm voting for XYZ person because interest rates are higher than when the other person was in the office." The Fed fund rate was 0 to 0.25% between 2016 and 2020. That's why interest rates are lower. The president doesn't have anything to do with interest rates. Okay, now I feel better.
What about like the price of eggs in those sort of economic?
Let me think. I'm glad you asked that question. Also, I call the American Idiocracy the American Idiocracy for a reason.
Great movie.
Yeah, and one of the reason was there was the avian flu came in, wiped out about 200 million chickens, and what happens in those times is the guys got to go buy new chickens, and so they spent $4.5 billion to buy new chickens so we would have eggs, particularly during a pandemic, and they paid 3x to 5x the amount they normally did for chickens. So they needed to raise the prices so they could pay the debt that they borrowed to keep us in chicken. Do you ever hear that from a debate? Do you ever hear either side talk about actual macroeconomics? No. And that's just, it kills me.
This is the whole case for why it was better under, one guy versus now, because now all these food prices are so much higher because of inflation.
Oh, okay. Well, first of all, we could go down that rabbit hole all day long. Let's try to stay away from that, stick to the markets. But I do want to talk about a little bit on the political party side, because in the Stock Traders Almanac on page 80, you have a wonderful chart. You can see it on the screen right now, and you can really pinpoint, Jeff, what you have put into your analysis as far as if you do have a Democratic president versus a Republican president, and also the mix of Congress.
Mhm.
So
It's really about Congress.
Yeah.
It's really about Congress. 'Cause
Okay.
what do they control? The purse strings.
Yeah.
Okay. All the stuff that either candidates thought about putting through, it's got to go through Congress, and it's not
Okay,
going to
well,
happen so easily.
Well, that's
from
another-
a fiscal policy standpoint, you're absolutely right.
Well,
Yeah.
that's another part of the idiocracy. You know what? Oh my gosh. Here's what I'm going to do. I'm going to cut this tax. And the president, running for president. I'm going to cut this tax. I'm going to give Medicare free. He doesn't have a iota of control. It's the
Right.
Congress by
Actually, the brilliance of the
right,
founders,
the brilliance
our
of the
country.
tricameral legislator, even though nobody knows what that means either.
Three
Yeah.
bodies.
Yeah, that's the whole balance of power. They didn't want to have a dictator. They didn't want to have, a king. So they put these constraints, and only Congress can pass a bill that raises taxes
Spends money.
or spends money, right? So
what you're so I don't mean to interrupt you, Toby. So what you're suggesting, according to the Almanac, is that if you have a Democratic president but a Republican House and a Republican Senate,
Yes.
that is the best mix.
Absolutely.
As far as history showing
Historically,
us for the markets.
16 here, I'll put on my glasses. I got to look at it.
Put your glasses on, old man.
Democratic president split Congress, where one house is one party, other 12.1%. Republican Congresses in general, 14.6% versus Democratic Congresses, 6.0%. Republican president, Republican Congress, 13.0%. So Republican Congress, though it might rub some people the wrong way, seems to preside over the best performance in the stock market because of the purse string, control and being reluctant to spend money.
Well, that was so interesting, though, Jeff, because during those days that you talked about, those the GOP, the grand old party, was the party of constraints. I mean, the whole idea was that you get the crazy spending, left wing folks, and you get the right wing, purse string, money matters. You have to pay your bills, and they would balance each other out. But this time,
used to work that way.
It used to work that way. Now, the GOP candidate is discussing more tax rate, more spending than the Democrat. She hasn't come up with another way to do it. The whole world's changed, buddy.
And historically speaking, the inverse of that is you have a Republican president, but a Democratic controlled Congress is actually the worst performing,
right,
at just under 5%, which is incredibly shocking. Actually, I believe it's shocking, but it's interesting. So can you explain that though a little bit in a little bit more detail? Why is that? Why do you see it that way? If you have that type of a mix, that it could be a weak performing market.
I think Toby was touching on it there. I mean, you've got a progressive, administration in the White House trying to push new things and create change and do things. Where you've got a conservative, fiscally conservative, controlled Congress trying to make sure we only get the best things through. Whereas if you flip that, you've got a conservative person not wanting to do anything, and you got a liberal, progressive body trying to do everything, and nothing good happens. Whereas
that old stalemate thing was really good. The really stupid ideas would get killed. The just stupid ideas probably got killed. But most importantly, in the history of the United States, up until recent history, we actually had balanced budgets. I mean, there was actually a law that said you had to have a balanced budget. And when that got taken out, Todd, it was a game ball, right? It was a game ball. He reminds me of a Scott we were just talking about. So the people.
Can we throw in term limits too while we're getting political?
Right.
Congressional term limits.
Yeah. Well, no, I don't think there were ever, to my knowledge, there were never congressional term limits.
I'm suggesting it might not be a horrible idea.
It would not be a bad idea at all. Exactly.
So to conclude though, so you are bullish regardless of what happens on Tuesday, it sounds like,
Yeah.
for 2025.
Yes, regardless. As
Regardless.
long as something conclusive happens on Tuesday or Wednesday or shortly thereafter. If
Right,
it's,
right. Not a
I mean,
hanging
remember
chad
remember what
situation.
happened in 2000 with the undecided election and that kind of
You're
stuff.
right.
Anything like that, I think, could be a problem. Just to put it mildly.
Jeffrey, I know you don't do sectors, but do you ever take your stuff, down to the sector level of what
Yeah.
sectors do better? Okay.
We do some sectors, not
Okay.
necessarily like I think what you're implying is about what sectors are going to do better under Trump versus Harris. Is that where you're going with that?
Or just any, change of leadership.
Yeah, any change of leadership. We're sector seasonal oriented. I mean, I think there are some sectors that are more macro trends than others, but the change in leadership, from conservative to the liberal or vice versa, I don't see as much of an impact. I think with the current, players that possible, changes there, I think we can get some benefit in the energy, the oil patch from, Mr. Trump's side of things, maybe financials as well. I think the yield curve's helping that as well. I'm not so sure what sectors other than, green, economy type stuff is going to
we
be
have
better
the
under
Inflation
Harris.
Reduction Act that got passed through Congress and signed by the president, and that was $3.2 trillion. I have capital market clients of whom we've borrowed. I mean, we just did something yesterday, $150 million loan from the DOE loan office, Department of Energy, and they are handing out $150 million loan guarantees like candy up there right now. Because I guess
so like Intel.
Well, the Intel at the high end, that's 7 billion or 8 billion. I'm talking about like smaller sustainability type projects, clean hydrogen, carbon capture that works. Our carbon capture client just got a $150 million loan guarantee, and then got a $1 billion backup from a large group that we've organized for them, because they want to get this stuff in now, because they don't know how the government, what the future is going to hold, and they don't want, they want to get the money while it's flowing. So that sort of speeds up a lot of this stuff. And if interest rates were actually to come down, significantly, then we would also have. It's very expensive to build a $45 million carbon capture plant if the interest rate you're paying on a commercial rate is 7-8%. So if commercial rates come down, that gets the industrial world going a lot faster than boycotts and tariffs, and that's the last I'm going to say about that.
How about nuclear?
I love it. I think that's great. Guys, we're going to close it out on that note, because there's so much more we could talk about. Obviously, Jeff's going to be back on Buy, Hold, Sell. We're going to talk more about the Stock Traders Almanac. Jeff, can you tell the audience, though, where can they pick up their copy of the 2025 edition?
Well, you can always go to Amazon or wherever books are sold. But if you want to get it for free, go to my website, stocktradersalmanac.com, and it comes free with a subscription to my newsletter. Track me on Twitter and all the other places at Almanac Trader. But stocktradersalmanac.com will give you all the info you need.
Love that. That's great stuff. Well, I know everybody is going to be rushing there. Hopefully we could break your the servers there, because you have so many people that are going to be buying this edition, because it's well worth it. So that's absolutely.
That is a classic Schoenberger, isn't it, Jeff? not that you're going to sell a few shekels on books. No, you're going to break the server.
We're going to break the server. We're going to have a flood of people. There's a tsunami of people will be buying this edition, as they should.
The master of understatement, Todd Schoenberger.
Absolutely. Well, I got to say, coming up later on for Crosscheck Media on Toby's new show, Money Mavericks, this Friday, we're going to have Dave Nelson. If you haven't seen the first episode where he profiled versus AI, you got to check it out. It's an absolute.
And that one's on all of my social media, and actually I just updated it. So yeah, it's pretty cool. Pretty cool story.
It's a wonderful story. Wonderful story. And if you just look at the comments just off of the show on YouTube alone, everybody's really behind it. It's a lot of excitement. So definitely a can't miss episode.
You mean for that one guy who really hates me? I got rid of him. I blocked him.
It's all right. He's just
Hey, if you don't have haters, you ain't popping, Toby.
That's
there
right,
you
baby.
go. There you go.
I'm
He's
with
just
you.
envious.
Good luck.
There you go.
Good luck in the series, Jeff. Not.
Oh, thanks, man. Maybe
Absolutely.
we'll get to hook up in a couple weeks.
All right, look forward to it.
There you go.
Yep.
Well, that will be great, and we'll also we also want to, with the game for the World Series. When the show airs, though, maybe we'll have a world champion. We'll see if.
Oh
not,
yeah, it's
something a
gonna
lot
be
more
this
to see.
color too. Trust me. Yeah, he's
Absolutely.
green. He's green with envy over this team.
They do look good.
So listen, thanks again for joining us on behalf of Jeffrey Hirsch and Tobin Smith. I am Todd Schoenberger. Thank you once again for joining us on Buy, Hold, Sell. We'll catch you next time. Take care.
Take it easy.
Buy, Hold, Sell, brought to you by Crosscheck Management.